Just gonna.
Inspiring leaders.
We're getting ready to go. We're live right now. We're a little early, y'all. We have some technical difficulties, but we are going live at 1 o'clock. So stay tuned. Thank you for joining. If you're out there, say something in the comments. You good? Okay. Swan, y'all.
Can.
Hey everyone, it is Wednesday. You are listening to 97.5 FM KDEE. I am Agent Key and we are Selling Sacramento. And just as a reminder, Selling Sacramento is brought to you every Wednesday by Matthews and Company Realty Group, where I, Agent Key, am the broker and owner, where I love helping you buy, sell, and retain real estate. And if you are listening to the show, know that you can also see the show live in real time on YouTube and Facebook and LinkedIn. Just search for Selling Sacramento on the radio on Facebook or Agent Key on YouTube and LinkedIn, Keisha Matthews, all of my various names, and you'll be able to tune into the show as it's happening. We love to have our listeners and viewers on the social media sites because there you can ask questions, you can talk to us. We see you in real time communicating with us. And so I want to give a shout out right now to Ronald Bennett, who is a lender. He's out of state right now, but Sacramento is his home spot. He's saying good afternoon from 43rd and 13th Avenue in Sacktown. Thank you, Ron. Thank you for tuning in. And so for today's show, I want to introduce my guest because we want to jump right into this. This topic today deals with or tackles one of those tough issues that is one of the biggest challenges, not only for minorities, but even specifically for business owners.
That's right.
Small business owners.
Yes, business owners, just all kinds of people that are basically off of W-2. So
right.
1099.
So if you're a business owner and you are thinking of home ownership, and I say small business owner, then this is the show that you want to be listening to help you prepare for home ownership. It's an alternative method to financing. And I kind of want to go down a list because if you're listening, I'm going to go down this list of who this show is for. And if you hear your name on the roll call, then you probably want to tune in. So this particular product that Juan Lashley is going to present to you today, it benefits a borrower who may be a retiree, who may be self-employed,
yes, ma'am,
a real estate investor,
realtor,
business owner, as we said before, a foreign national,
yes,
a buyer who lives off of investments or has high assets and low income.
That's right. Yep.
Buyers with high debt to income ratios.
Yeah, we can work with those up too. Mm-hmm.
And buyers with less than perfect credit.
That part of it, we can talk about some more.
Okay, yes. So I just put a lot on his plate this afternoon, and he's going to tackle it all. Juan Lashley, introduce yourself, sir.
Good afternoon, and thank you, Keisha, for having me on your show. My name is Juan Lashley. I'm a loan officer for Prime Lending. I've been doing loans for the neighborhood of about 25 years now, and I am just so excited about what we have to offer to clients that are looking to buy, or people that are looking to buy houses, because this opportunity, there's 54 million people that are self-employed out there.
Wow.
And so if we look at our pool of folks that are basically getting the regular loan, the Fannie Mae, the Freddie Mac, conventional, basically vanilla loans that are out there.
Mm-hmm.
This product gives you an alternative to that. You can use bank statements and just basically just just do a loan that's doesn't require the tax returns, and that's really good.
And so let's talk about that really quickly. Let's give people a rundown of what is a non-qualified mortgage in comparison to, because that's what it's called, a non-qualified mortgage,
Correct.
right? In comparison to what a qualified mortgage is. And so the qualified mortgage, I just want to read some information. It says the best way to understand a non-qualifying mortgage is to look at the criteria for a traditional qualifying mortgage. To qualify for a traditional mortgage, you must meet these requirements. Your income, you must have verifiable income, including pay stubs, W-2s, and tax returns. Your debt to income ratio must be 43% or less, and Juan can correct me on the numbers. This is the amount that your monthly income, the amount of your monthly income that goes towards your existing debt. So when you hear debt to income ratio, that's what that means. There's limits on fees. Points and fees on your loan can't exceed 3% of the loan amount. With a traditional loan, there are no risky loan features. Risky features include interest-only loans, where you only pay interest without reducing the principal, negative amortization, where your principal can increase even while you're making payments, or balloon payments, where a larger payment can be tacked on at the end of the loan. And another factor of traditional loans is that the loan term must be 30 years or less. If you can't tick all of those boxes, then you may want to look into a non-qualifying mortgage.
And that is very so correct. The non-qualifying mortgage is basically any loan that the government does not insure. So we have the Fannie Mae, the FHAs, and the VA loans. Those are all loans that are purchased by the government after they close through the traditional bank that they're going to go through, or broker channel. After that loan closes, then that loan is pretty much packaged and sold, and you have a servicer who's on there that'll basically service the loan for you. Now, with the non-QM loan, basically the government wanted to create another space for pools of money that can go in to help home ownership that is different than a qualifying mortgage. So these products are definitely outside the box. We think a little bit different. Basically, the loans that are out there that are available, we can do 40-year term, we can do interest only. There's no negative amortization loans out there that I have seen that is non-QM loans right now, but I would be sure to say that there would be a possibility for that, because investors are always
Describe them to us so that we can get an idea of how they work.
So the two or the three that I really utilize the most would be a bank statement loan, and that's going to take 12 or 24 months bank statements. We look at what goes in minus what goes out, and then based upon that amount is what you can qualify for. There's no tax returns that need to be provided with that program. So that's one of the aspects of a good program like that. And the same side of that fence is the bank statements. The other side of that is a 1099. A lot of truck drivers, a lot of people that are out there in different segments of employment have many employers. And because of that, we can take 10 or 15 1099s and subtract what their expenses are and use that as qualifying for the client to basically buy a house. And there's no tax returns needed on that program either. And then the third one is called it's a loan program for investors. And then that program, we don't even qualify the borrower. The property is the qualifying asset. And so it's another avenue for home ownership that takes it out of the space where you have to give 2 years bank statements, 2 months bank statements, 30 years. The tax returns and the W-2s, we don't need any of that information for those non-QM programs. So It's a really good way to do it.
So you actually, I was, and I apologize if I didn't clarify, you actually were naming the non-QM programs.
Non-QM.
Now, can you, because I want you to elaborate on that a little bit more, but can you go to what the regular traditional, tell us a little bit about the traditional loans so that we understand. I want our listeners and viewers to understand, here are the traditional loans that you hear about, and here is what a QM loan is, and this is the difference.
Okay. So the difference with the non-QM loans, I mean, from a regular traditional loan, number one is the down payment is going to be more.
Mhm.
Now, you're going to put anywhere from 10% down and up to get a non-QM loan. Whereas the conventional FHA, VA loans that are out there, you could go in with as little as 3%. With VA, you could do no money down. So those are the products that would be out there. FHA would be 3.5% down, and the rates tend to be about a point better than on the traditional loans that it is compared to the non-QM loans. So they're a little bit higher in interest rates, but a lot of people that's out there that have been told by their banks that they need to pay more taxes and write more stuff or write less stuff off on their taxes to have more taxable income.
Mhm.
Therefore, you're making more payment. I mean, you're getting a bill from the IRS because you claim that income, and you still have to pay the taxes on it. And we
Mhm.
have to use the taxes to qualify. If you don't, with a traditional loan, if you don't claim the taxes, we can't use the income.
And so that's one of the biggest hurdles that I've seen for a lot of business owners is that, of course, most business owners want to be able to write off as much as possible.
Right.
So they're paying as little as possible in taxes. But when it comes to home ownership, you really want to be showing that you earn more income.
That's true. That's very true.
And so the benefit of the non-QM loan
is you don't have to deal with that being a case that's going to lock you out of home ownership. And so there is so many people that can benefit from this product. I touched on the basis of the truck driver, but there's a gentleman that I'm helping right now. He is getting a product, a non-QM product, and he sells sneakers. And he makes about $25,000 a month doing sneakers.
wow.
So,
But he has it.
he doesn't.
Yeah. Okay. The money's going in the shoebox or something.
That's right. That's right.
But through the bank account, possibly,
Yes.
definitely.
Yes, through his
Consistently.
Consistently.
And so you're able to take those bank statements.
Minus his expenses. Now, he does not have, like most self-employed borrowers, like a business owner. He doesn't have the employees to write off.
Mm-hmm.
So most of his money,
his overhead is very little.
Very little. Very little.
Wow.
So when it comes back that these people can't buy a house because they haven't claimed the money on their taxes, they're pleasantly surprised to find out that they can afford a $700,000-$800,000 house.
Wow. And actually, over the past 2-3 years, because of COVID, we saw a rise, a huge spike in people basically leaving their full-time jobs and going independent, becoming
That's right.
business owners,
Mhm.
self-employed.
Mhm.
Yeah. And I want to say kind of proudly, I saw a news article that said Black women were the largest increase in self-employed businesses that opened up last year.
I would have to concur with that. Yes.
Yeah.
Yes.
So if you're listening out there, Black woman, Miss Self-Employed, and you want to become a homeowner, you may want to connect with Juan Lashley so that you can look into how to utilize this non-QM loan. And not just self-employed Black women, but self-employed people, period, who have a desire to own a home and have run into this as an obstacle into getting into home ownership. So what's the difference? You just talked about the difference between QM and non-QM. Are there any other points that you want to point out?
No.
Anything significant?
Well, the big significance is that you will run into people that had no idea that this product is available to them.
Mm-hmm.
And then once you kind of explain it to them that, this is something that can happen for you now as
Yes.
opposed to later. Most of them have been told that you have to have 2 years worth of taxable income and a significant amount of taxable income to buy a house here in California.
Right.
You would be surprised for the people that do not think that they would qualify for a house because they've been told no so
Right.
many times.
Right.
And so, first I think it's disbelief that you have something that would work for them.
Right.
And then the belief turns into reality once they see that it can be done.
once you explain the process.
Right.
Yeah.
Right.
And so then that brings up another question. What kind of hocus pocus is this? Is what somebody's probably thinking when you initially explain it, when you said they're thinking, well, how is this happening? And we're going to take a break, but I want to dive into that and we'll talk about the pros and the cons.
Yes, ma'am.
There are some cons that you definitely want to be aware of. And I don't want to use the word con in a negative way. There are some good things, and then there's some things that you want to be aware of.
Right.
How about that?
Right. The good, the bad, and the other.
The good, the bad, and the other. I like that. You're listening to 97.5 FM KDEE. I am Agent Key here with Mr. Juan Lashley, and we will be right back.
Hopefully that was good.
That was great. That was perfect. You're doing well.
I stumbled over a few words there. I was like,
no, you're good. You're good. Miss Valencia Michelle said, Michelle, she said, hello, power team of real estate professionals, Agent Key and Loan Officer Juan Lashley. Good info on non-QM loans. Thank you, my dear. So good to see you. Merry Christmas to you and your family. And same to you, Ron. Hey, y'all, if y'all are out there watching, let us know by saying something in the comment section. If you have any questions for Juan about this loan product, let us know. He's here to answer those questions for you right now, live in real time. When we come back and we start talking about the pros and cons, I'm literally just going to go comfortably, I guess, down the list of questions.
Yes.
So I don't want to surprise you. Okay. Okay. So then after the pros and cons, are there any similarities to subprime? Are they safe? That type of thing.
Yeah, we're talking about a big difference about the two.
Okay. And then the alternatives. Are there any alternatives? And then how do they find the non-QM loan? Yeah. Yep. All of that. Oh, Miss Faith, good info. Thank you, dear. Thank you. I drank some, have y'all ever had red beet juice?
No, but I've been thinking about it now.
Yes. I bought the powdered form, and it's red beets, acai, is that how you say it? Acai berry,
yep.
And pomegranate. And it's a powder form of all of those.
Okay.
It is instantaneous, I need to say. So the whole idea is that with beet juice, have y'all ever used beet juice, that formula? Y'all know what it's for? It's supposed to be able to, it stimulates your blood circulation.
Oh, okay.
And it really does. You can feel like and then things just start moving and
wow.
Things start moving.
Sometimes we need a pickup.
Yeah. So I started using it because a friend of mine recommended it who works out a lot. And they said it's a good alternative to caffeine. You know, people trying to caffeine up before their workouts. It's a much more healthier alternative. Ron said, do you have a FICO score requirement? We're going to talk about that, Ron. We'll bring that question back up when we come back from the break. Great question. Thank you. It sounds like we're coming back from the break. Okay. Somebody's having some good lunch.
I know it.
Very good.
Man, I walked through there too. I was like, you know, I'm big too.
Yes.
5.
I'm always looking for food. Hey everyone, we're back. You're listening to 97.5 FM KDEE. I am Agent Key, and we are talking specifically to the self-employed. This loan's for you. Maybe. We are talking about available untapped funding here with Mr. Juan Lashley, and we just went over the types of loan, the difference between this loan type, which is called a non-qualifying mortgage,
correct,
or non-QM for short, and a qualifying mortgage, which is your traditional mortgage product like the FHA, conventional, even a VA loan, and the differences between those. Now we want to ask the question, because you did say that once you explain that this product is available to people, it's almost like they don't believe you.
That's right.
Until you explain in detail how it works. But let's get in front of this and start talking about the pros and the cons.
That's right.
What are they?
So the pros on this program is that yes, you will get into a house for a lot less. I would say a lot less paperwork,
red tape.
There you go. There you go. And the we look at it like this: is that if you're locked out of home ownership, then this gives you a way to do that. And so you always can come back and refinance your house later. So this program here, if the credit scores with the traditional loans can go a lot lower than what the non-QM is, but I'm just going to use like FHA or conventional. We can go down to 620 and sometimes 600, and I haven't seen too much of the 580s lately because of just they're harder to get done. There's a reason that people would be at the 580 score for late payments and things of that nature. So these programs that are non-QM are looking for people with a higher credit score. Now the minimum score that we have for the bank statement loan is 660. And that's with 10% down, 30-year fixed, interest only. You could do that. I have a client right now that wants to pay their taxes and insurance separate. You can do that. So that way you only have to pay your principal and interest, and then you pay your taxes and your insurance later.
Oh, so having the flexibility.
Yeah.
So far, I've heard you say a lot of things that brought up questions and points in my mind. If you all are watching online and you have questions, put them in the chat as he's talking, and we'll revisit them and have him to expound on them. A couple that came up while you were saying that was, number one, when you said they can separate out, or first of all, have an interest-only loan, and then separate out paying the taxes from that. That's very convenient. And we have to remember, keep in mind, ladies and gentlemen, we're talking about self-employed. When you're self-employed, you're not getting this regular paycheck on the first of each month that has all of the taxes and things taken out of it and is a certain amount of money. For a lot of self-employed people, they have really, really good months and then not so good months. And the income every day is up and down depending on a lot of different variables. And so for someone to be able to take an interest-only payment option, or even be able to pay your mortgage where you're paying the principal and the interest, but you're paying your taxes separate, just making sure you are paying down on that note. Because there could be a month where you have a great month and you say, I'm going to use this money to pay my taxes.
Right.
Yes.
Right. And you have to look at an impound account. It is a tax. I mean, it's an account that the bank holds your money for you, and they pay their taxes and their insurance when they become due. And most of us, at some point, we can be responsible and pay our bills when they are due.
So you don't necessarily, and so this is the other point that came up that came to mind as you were saying that the structure of the loan being set up for FHA and conventional to have the impound account, is to have everything to ensure that all of these things get paid. But, and this could be another reason why with the non-QM loan, they're looking for higher credit scores, like you said, because they want to make sure that they're getting someone who does have a history of paying their bills on time. And if you have a history of paying your bills on time, chances are you're probably going to be responsible enough to pay your taxes on your own without them being in an impound account.
That's right. And, on FHA, you don't have the option to pay your own taxes and insurance. It is mandatory that you pay your taxes and insurance student loan. VA is the same way. Conventional with 20% down, or 10. No, I think it's 20% down. You can pay your own taxes and insurance. I might be wrong on that because it's been a while since I've done a loan without taxes and insurance being included on a conventional side. But I know that it's not as easy to do when you do it that way, or the rate is a little bit higher because of you're having, they're taking the responsibility off of them doing it and giving that responsibility to you. They're going to make you pay a little bit more. The same thing with non-QM. You can have the 30-year fix, which would have a little bit better interest rate. Interest only is going to have a little bit higher rate. 40-year term will have a higher rate. So it's just
so there's a little bit, it costs more to go non-QM, but the idea is that the individual buyer who we're looking at, this particular person, probably has the finances to be able to cover the cost more.
And that's true. I have not ran into very many people that want to get a non-QM loan that does not have good credit,
Right.
does not have a lot of money
In the bank, yeah.
Mhm.
Okay. Are you ready to answer a few questions from our
Yes,
folks
ma'am.
online? So Ron asked the question. Whoops. I had Ron's question here. There were other questions come in. I'll get back to yours, Dion. Do you have a FICO score requirement?
Yes, we do. So the FICO score for this program is 660 and above. As the scores get higher, the better interest rate that you'll get, the better terms that you'll get to negotiate, and they do set standards that they want for their products. However, it's kind of like a la carte, so you can kind of add the things that you would like to that. But the higher credit score that you have, the better off that you are, the better rate that you'll get.
Okay. And so Dion is asking, what about a person who is self-employed and has a part-time/full-time job?
We can use those as long as it's a 1099 part-time job. But if it's a regular W-2 job, then we can't blend the W-2 because that's going to require us to look at the taxes to verify that.
So that W-2 income can't be added to the purchase file.
It can't be, but just say if you're a business owner and you do DoorDash or you do something that would be outside of a regular job, a 1099. You drove Uber or Lyft on the side, 1099.
That cash can be added.
Right. We can use your bank statements on one side of it, and then we can use your 1099 to blend those to get more income to qualify if that's the case that you wanted to use those
gig jobs.
Mm-hmm.
So if you are a business owner where you have your main business plus a gig job, so any type of income that you have coming in that does not require being verified through or not.
That doesn't need to be the
1099.
1099. Well, doesn't need to be verified by the IRS. So that would be a W-2 would need to be verified by the IRS.
Okay. And so I'm thinking also, we have a client that we're working with, and we're potentially going to propose to her an option for purchasing where she has a very large amount of money.
Mm-hmm.
The proposal will be for her to purchase a home, a multifamily, and for her to live in one side. Yeah.
Mm-hmm.
So then the other properties, the other units become
rentals
income. Right. So would she still be considered self-employed if she then sets herself up?
We could use that DSCR loan, which is the debt service, would cover that side of the rental portion of it, and then she could also use her income from that she gets on the 1099 to help her qualify, or bank statements to qualify. So we would blend those incomes, but we'd have to do it without the tax returns.
Okay. Okay.
So
a lot of different options here.
Mm-hmm. Yes.
So it sounds like if someone is self-employed and they just have, it doesn't matter what the scenario is, they need to reach out to you, present the scenario, and have the conversation. Right. With that being said, how do they reach out to you? How do they connect with you?
My number is 916-549-3997. And my email address, or not my email, my website is www.juanlashley.com.
Say that one more time. Yeah. Phone number and website.
Okay, my website is www.juanlashley.com, and my phone number is 916-549-3997.
And Juan Lashley is JUAN
LASHLEY.
Okay, one more time.
JUAN LASHLEY.
Okay. Mm-hmm. And we have one more question here from Dion. She said, I was thinking of full-time W-2 with a small business, self-employed at the same time.
That wouldn't fit in the non-QM space because of the W-2.
So just absolutely no W-2 income.
Right.
Okay.
because we don't want to see your taxes. We want you to keep that between you and your tax preparer and the IRS.
In order to make this type of loan work.
Yes, ma'am.
Okay. Oh, did you just call me ma'am?
Yes. Military days.
Okay.
Okay.
So now, are there any similarities to the non-QM loan and subprime mortgages? Ultimately, are they safe?
Yes, they are very safe. And I think that once you kind of compare an apple and an orange, you'll see that the hard money loans or those other products that are out there have more points tied to them. They have different things, and the rates tend to be a lot higher. They are more or less driven directly off of the property, more or less than the individual on the hard money loan. So this space here, it's backed by billions of dollars that are on the stock exchange, and the money. It's just kind of amazing where you see the investors that are multi-billionaires and millionaires. They are putting funds into these ways to get more money on the return than what they get by putting it in a bank and getting 1%.
Wow. Mm-hmm. So it's a little private little market there to help the investors make money.
Correct.
So there's a comment from Valencia. She said, Juan has helped my clients and he goes above and beyond in providing great service.
Thank you very much, Valencia.
And then so Dion has a follow-up comment. Oh, perfect. So do we need to show 2 years bank statement deposit?
We can go 12 months or 24 months. Now the rates get a little bit better because we're showing more of a history of what the people are making deposits for. What could be something that could be a pitfall for me would be if somebody had 24 months and in that time frame they got a PPE loan / or something that they didn't have to repay. Right. It's an anomaly in those bank statements, and then there's questions about that money being having to be paid back. So the 24 months, one of my clients, we had to go from a 24 months to a 12 months, and I had to change the bank that we were going to run it through, because once they see it, then the cat is out the bag.
Right.
So we went to another one once we knew what we were going to be having a pitfall for, and we just did the 12 months, but we were still able to get it done.
Okay, so I like that. Did y'all hear what just happened here? He's resourceful. I'd like to also add that he is our newest lender partner in the SAC Club 100 squad. And last week, I have to make this announcement as well. I'm calling it an announcement. 12 people signed up to have the conversation just based off last week's show. 6 people actually scheduled appointments. We had almost all of my lender partners spoke with someone last week from last week's show. And not only did they speak with them and help them map out a plan, but 2 days later, one of them was already out, and Chanel and Suzette from the Diamond Duo on SAC Club 100 made an offer for her already. So within 72 hours of her having her meeting, she's out there seeing properties and having an offer made. We have another client who wants to close escrow before the new year is over. And it's probably possible because she has a ton of cash. And so we can make that happen for her. We're going to try our best to make that happen. But I'm saying all of that to say that having people on our team like Juan, who you're listening to today, is what helps make the Club 100 effort possible, where we are setting out to help. And I call them the most challenged buyers, because it's almost also a mindset. When you think that something's not possible for you, you're challenged. When you've been told that home ownership is not attainable, or you are in an environment where everyone is renting. And so that's the storyline, right? Having the conversation helps you reset that mindset, and having people on the team who are committed to listening to your story, understanding where the challenge is, and that's again why I use the word most challenge. We're like doctors, where during that conversation we sit and we listen to hear what are the challenges, and then we go to work on helping bring solutions to your challenge. And so when I heard Juan say, once we knew what we were up against, we repackaged that baby and put it back out there to another lender to make it happen. That's why he's on the squad. Boom. Fist bump. Fist bump.
Thank you.
So you will be able to find Juan on the website, but you'll also be able to contact him directly based on his information as well. But you'll be hearing a lot more from him. And now you know we have a non-QM specialist on the team. So for all of you small business owners, and that list that we called off earlier, retirees, self-employed, real estate investors, foreign nationals, a buyer who's living off your investments, buyer with high debt to income ratio, and less than perfect credit. He gave you the skinny on that. We really want you to be able to have good credit. We don't want to set you up for failure.
That's right.
And if you come to us and have a conversation with us and we see that you don't have a credit history and that there are some other financial challenges there, our recommendation is going to be something like a financial literacy course, something like the Dave Ramsey, what is it called? I actually went through it. I'll get the name in a second here and I'll recommend it to you guys. And I've talked about it on the show before. It's like an 11-week financial course that helps you figure out how to create a budget, to get on track, know where your money is. Every dollar has a name. That's what Dave Ramsey says, And so we really want to make sure that you have a basic financial solid foundation. Were you going to comment about that?
Well, it just sounds to me is that we have to have a plan, and people don't plan to fail, they fail to plan.
Yes.
And so if we put ourselves on the path of home ownership, you have to walk that path one step at a time. And if it's cleaning up your credit, if it's getting the things that we need, because non-QM is not going to end all be all for everybody, but there's people that will fit into this box and fit very well and be pleasantly surprised that this is something that is beneficial to them.
Mm-hmm.
And then, if you're in the business of helping people have home ownership, once you open that door for one person that's a self-employed person, a lot of times they've got friends that want to do the same thing, that have been told and rejected and denied the opportunity. It opens up doors that you would never think that would open for
Right.
you.
A lot of self-employed people travel in the same circles. Let's see here. We got a few more questions. First of all, Jay King said to tell Juan I said hello.
Hello, Jay.
He said hello, Jay. And let's see. So Dion said, so starting this year, make sure to make all my deposits for the next year and work on keeping my credit score good at the same time.
That's right. That's right.
Awesome. And then Miss Amber, that's Everson. Alexis said, hi, Daddy. I'm so proud of you.
Oh, Lord. Okay. All right.
Aww.
Hey, wifey. Hey, Lexi.
He said, hey, wifey. And then Dion said her son is self-employed, so I want him to see this. Yes, absolutely. Absolutely. And give him a call. Give Juan a call and just have the conversation. I like how Dion said, so this is what I need to do. Because guess what? In 365 days, you're going to be having this conversation with yourself again, but you could have taken those 365 days, mapped out a plan, and been ready to go.
That's
right? So
right.
I love that, Dion. She said, since he has no debt or credit, should I add him on my credit cards to help him obtain a credit score?
I would say yes. All parents with good credit, add your children as a user, authorized user with no card.
There you go. There you go. And that financial literacy class that I was referring to earlier on Dave Ramsey's website is called Financial Peace University. And when I took the class, it's been several years now. I took it. It was about $100, but online now it's $69.99, and it's an entire kit. If you go to the website, you can actually locate a facility in your area. They host the classes where you can have accountability. And I believe, I'm looking on the site now, if you want to, I'll tell you what, first of all, they say you learn how companies manipulate our brains to get us to buy and how you can outsmart them, how you can become a millionaire in the myths about building wealth that are just plain wrong, how to avoid the modern money traps that are stealing from your paycheck, and even more. And that's their new content. I should say that's their new content. But the description of the class, it shows that whether you've never experienced the hope of financial peace or you just need to get a refresher, now's the time to take the course. It's a 9-lesson course that teaches you step by step, aka the baby steps, to pay off debt fast and save more money for your future. And they say it's a full of energy course, easy to understand lessons, and real life examples of people just like you who have taken control of their money for good. And if you've ever heard of Dave Ramsey, he's been teaching common sense biblical money principles for over 25 years. And in Financial Peace University, you learn to take control of your money, attack debt with a vengeance, and pay it off fast, save for emergencies, choose the right insurance plans, invest wisely and build wealth, and give generously. And you can also join the in-person or virtual classes for community and support, stream the lessons anytime, anywhere, and download the digital course workbook. I actually took the course where I attended in person. You go to the website, type in your zip code, and it tells you what locations they're having the courses at. You go there, and then you just attend the classes on a weekly basis at your convenience. So I highly recommend it. It's a great way to understand money and your relationship with money and help you get a better relationship with money. If you get into a home and you don't understand how to control your finances, that's when you're setting yourself up for failure, because you end up treating your home like an ATM, over leveraging yourself, and less than 5 years later, you're now upside down. A little bit longer, chances are you're going to end up in foreclosure. And I don't say that to scare you. I say that to say, just be smart about it so that that doesn't happen to you, right? You have anything you want to add to that?
Yeah, well, I mean, it's just, people out there are trying to get into home ownership, and a lot of them are just trying to figure out a way to make it work to get them in the door. But you have to also think about, what are you going to do to maintain it? It's one thing to get in and you're like, okay, I'm inside, now I'm looking out. Everything is fine. No, it's not fine, because you have 30 years to make a payment on that house. And it's not yours until it's paid off. So that
should be the next phase once you get in, to figure out how to get it paid off fast. There's some tricks to that too. And they're not necessarily tricks, but they aren't things that are talked about too often.
Right. And, it's just, the simple math on it is, if you can squeeze one extra payment into your mortgage every year, you turn a 30-year
down that principal
into a 23-year mortgage, just with one extra payment per year. And it's hard to get disciplined on that, but if you can figure out a way to cut some fat out of your budget, and figure out a way to do that, then long term it definitely will be helpful for you, for sure.
Absolutely. We're going to take a quick break, but when we come back, we are going to have some closing thoughts for you with regard to this non-QM loan. We'll take a few more questions online, and we will let Juan wrap it up at the end of the show. You're listening to 97.5 FM KDEE. I'm Agent Key, and we'll be right back. Hello, Miss AJ. Yes, we are happy that you are working with us too. I'm so happy that you're happy. Thank you. She said, and Dion said she keeps her cards below the 30% spending limits.
There you go.
I was one of the listeners. Yes, you are. Yes, ma'am. I love the in-person courses. Me too. I like to be in person, because so my attention can stay focused. If I do, like, I'm taking classes right now online, and I have to just shut everything off so that I can focus. I get so distracted so easily.
And we just are gravitating. Oh, my phone vibrates.
Let me check Facebook. Like this morning when I was getting ready for the show, I have two phones. I shut them both down, and I went and looked at them once or twice, but I turned them down, turned them off, and literally put them in another room, because it was almost like the vibe of it being in the room can draw you to it.
That's right.
It's so crazy.
I feel like I'm missing something.
Yes, I'm missing out. But Yeah, this has been great information. I'm excited about it because a lot of people, I mean, a lot of people I know in the past few years have started their own businesses.
That's right. That's right. That's right.
And it's just really tough because they're you start if you don't know what you don't know.
That's true.
And
That is
so
totally true.
as soon as you start your business, you're just concerned about getting that business up and running and off the ground, right?
Mhm.
And so before you know it, the year is over and now it's time to file taxes.
That's right.
So you just want to make sure that you just write off as much as possible.
I want a refund.
Because I want a refund. I come from the world of I need a refund. And then you think, oh, wait, home ownership. Well, let me
Right.
see your taxes. Yeah, I filed. Well, you're not, I made a lot of money. Yeah, but you
wrote it all off.
You wrote it all off.
Mhm.
You wrote it all off. So this is why you're watching this show today. If you're self-employed, tax season is coming up.
It's time to think different because you have I say this is that, if you do your taxes for 2 years after you get into your house, refinance out of that non-QM loan into a regular Fannie Mae, FHA, VA loan, that would be later. But, getting into the house gets you out of paying rent. And that's something that, if you look at it like this, is that when you pay rent, you're paying somebody else's mortgage. It's just not yours.
I say that all the time.
You do.
It's not yours.
Yes. Now, when we come back from the break, you have to say that again.
Sure.
That's a very, very important point.
Mhm.
And we'll just bring it up just like that.
Okay.
Y'all gonna hear the repeat.
Can you remind them where to find you at? Because this thing has been blowing up.
Oh, really?
Yeah.
And you've been turning, and yes.
I turned the ring on.
Okay.
3, 2, here we go.
Hey everyone, we're back. You're listening to 97.5 FM KDEE. I am Agent Key, and on today's show, Self-Employed, This Loan's for You. Maybe. We've been talking about the non-QM, non-qualified mortgage. I'm here with Mr. Juan Lashley, and the phone has been ringing off the hook, I'm told. And so I was also told to let you all know where to find us. There's a few different ways you can find us. You can go and watch and listen to the show again on Selling Sacramento on the radio on Facebook if you want to watch the repeat. It will also be on YouTube as well as my personal Facebook page, Keisha Matthews Realtor. In addition, if you want to just have the conversation and talk straight to Juan, his contact information is
916-549-3997. And my website is www.juanlashley.com, and that's JUANLASHLEY.com. And look forward to talking to anybody and just explaining to them about the program. We can get in depth about your specific situation because everybody's situation is going to be a little bit different.
Mm-hmm.
And so we can't put everybody in the same box and explain that to them.
Mm-hmm.
So it's just, I think that let's have that conversation and see what we can do to make the product work for you. And if that product doesn't work, then we've got something that will, if you're open to suggestions or ideas of how to get you into home ownership.
Awesome. See, I told y'all he was resourceful. That's why he's on squad. Awesome. And then the other way that you can connect with Juan is to go straight through our Join Club 100 page and have the conversation. Click, have the conversation. Type in there, it's going to ask you what's the biggest challenge preventing you from home ownership. In that chat area, type in there that you were listening to the show today and you heard what Juan said about non-QM loans and you want to have the conversation. So join Club 100, JOINCLUB 100.com. Click on that you're ready to have the conversation and then go from there. So we make it really easy for you to just get started. We said you don't know what you don't know. And if you're thinking about, or even just listening to the show right now, if it dropped in your spirit, maybe I could be a homeowner. Don't kick that feeling to the curb. It actually is possible. It is true. And so move forward on that feeling.
I feel that what you just said is very important, and that way, if you will put yourself in a position, even though you feel in your mind that it's not the time to buy, let's get you all dressed up so we can be ready to go once you're ready to go.
Absolutely, because if you like Juan said, everyone's financial picture unravels differently. So, whatever happened for your friend 10 years ago, or for your cousin 2 years ago, or for your sister's niece's nephew last month, is not how your transaction is going to go. So, don't fear checking out what it needs to look like for you.
That's
Have
right.
the conversation. While we were on the break, we were talking about what's coming in the next couple of months. It's going to be tax season.
That's right.
And for the self-employed, this is really important that if you're considering home ownership, that you're filing your taxes properly. You want to address that?
Well, yes. I always say is that if you're planning for home ownership and you're working with a real estate professional and a loan officer or somebody who's going to help you get the financing for the property, give them an opportunity to look at those taxes that are prepared from your tax preparer, your CPA, before you submit them to the IRS, just to kind of give you a picture of where you stand. Because if we say last year you made negative, this year you make positive, then we're going to do a 24-month average on those conforming loans or the regular FHA, VA conventional loans, and it just gives you a way to see what you're kind of putting.
Right. Uh, what is this thing called? My connection, my
Oh, your
Wi-Fi
connection. Oh,
connection.
Wi-Fi. Okay.
It was connected to my cell phone, and now the chamber's connection is trying to draw back in. What is
Oh
that? What am I trying to say?
no.
Yeah,
Chamber
it's taking
signal's stronger.
control. Yeah, it's stronger. The signal is stronger, so it sucked my connection back over. So sorry about that for all of you who were watching. But Ron has a question, or he has a comment. He said this show has been very informative, even for someone in business, in the business. Congratulations, the team. You're definitely taking care of Sacramento. Thank you so much, Ron. Last question from Dion. She said, when qualifying for self-employed, do they go by how much you make a month before or after business deduction and taxes?
So what we do is we take an average. We will the way that we will take it is we add up all the income that we have for that month. Then we subtract what these expenses are, and we do that for 12 or 24 months. So it could be that way, or we can take your income that you have as your gross income, and then they'll use a rule that if they can't figure it out, then they'll go 50% of your income is going to be your expenses. And a lot of times people don't fit into that box where they have 50% of their income is going towards expenses. There is another client that I'm helping right now. She's out of state, and she is a home goes into a warehouse. She doesn't have to buy that couch again and again to put in another place. But initially, it might be a couch for $1,500, and then that couch is being reused. They have a different word that they have for it besides reuse, but it's being recycled. Let's just use that as our word. And so we have to look at those expenses and then make sense of them, and that's why we have the clients fill out a questionnaire. They explain, hey, I have one employee, I have no employees, I have people that, in this case here for the home stager, she has delivery people that go to the warehouse. They're paid on a per business project, yeah, expense. And so it could be a little bit complicated, but I say this is that if we have that conversation and you help me understand it, then I will explain it the way that it needs to be explained to people that are going to make the decision on how much you qualify for.
That's excellent. So it takes a very special and skilled person to do what you're doing. And the reason I say that is because you're the conduit between the information, the scenarios that look different for everybody,
Mm-hmm.
and getting that information packaged properly to be able to sell their information, or not sell their information, sell their story to the investor who's going to be providing the financing.
And there's many companies that we have, but and each of them has their own program. Some of them have higher credit scores that they want.
Mm-hmm.
Some of them will go lower credit scores. But I say this is that depending on what the specific situation is, I'm going to put you into the best investor product that's going to give you the program that you're going to want to qualify for.
Mm-hmm.
And sometimes, like that one that we got, we had to go from 24 months to 12 months. We just kind of learn as we go. So there's nothing I would say to be that's in stone, because it can be changing or evolving as we go through the process.
I did read that non-QM loans over the past several years have actually been, people would think or assume that they had loose guidelines, but that's actually not the case.
That is true.
And over the past few years, some of those guidelines have been tightening up.
It just all depends on how much people want to put down, how strong their credit is, how strong their business is.
Mm-hmm.
They are going to look at those as being compensating factors for sure.
Mm-hmm.
If somebody wants to come in and have 50-60% of skin in the game, then you're going to get a little different scenario being proposed to you.
Mm-hmm.
The loan amounts for these programs, it goes from $150,000 to $3 million. I can do up to $5 million.
That's an excellent question that you just
want to go that high.
indirectly asked yourself. So what's the minimum again?
$150,000 to $3 million with most of the companies that I work with. I have one that'll do $5 million. I haven't done one yet at $5 million, but I would.
You're waiting on that one.
Me and Keisha would love
if you're out there listening and you're ready to buy that $5 million home using a non-QM loan, give us a call.
That's right.
And just for the record, one last time, because we're about to shut it down, your contact information.
My name is Juan Lashley. I work for Prime Lending. I've been a loan officer for 25 years. My contact number is 916-549-3997. And I could be reached on my website, which is www.juanlashley.com. And that's JUANLASHLEY.com.
Yes. Thank you so much, Juan. Thank you for joining the team. I'm excited to have you. Thank you for coming in today.
Thank you for the invite.
Dion says she has one more question.
Come on, Dion.
This is her last question.
Okay.
Can your business buy your home?
No, you have to have an entity. So your business is not an entity. Your guarantor is you. So you would buy the home.
We hear that question all the time. You're listening to 97.5 FM KDEE. Tune in next week, Wednesday. We will be here, same place, same time. Happy holidays and Merry Christmas to everyone. And remember, if you are doing what you were created to do, I will see you at the top. All right, you all. Merry Christmas, everybody. We will see you next time.
Thank you.
Bye.